if you do the old style investing strategy and you're stuck in an investment, you're wasting 20 or 30 years of your life.
What would you say is the biggest frustration when it comes to building a capital gains tax exit plan as it pertains to like public stocks or real estate or business sales? And you have clients that are facing these massive, 10, 20, 50, $100 million exits. They have all this huge tax, and they also want to diversify that wealth and invest, into maybe some liquid investments or just really sit on the sidelines and wait like you're talking about. And so deals make sense. Talk about some of the challenges that people face when they're trying to exit these assets.
Yeah, to be honest, this is way outside my realm. I have a good lawyer, a good accountant, and they figure out all that stuff to do. So, I mean, this is your expertise, but here you probably might not even agree with this, but my dad always said he told me this when I was younger, and it just stuck with me. He's always like, if you're paying taxes, you're making money. So, and he's like, you're going to have to pay them no matter what, although you could argue that. But anyways, all I do is I find investments. I make as much money as I possibly can. And the accountants and the lawyers say, this is how you have to structure this purchase and move your money. And, as for a big exit, I mean, it's a huge, huge deal. Canada is probably similar to the States, but I definitely know our tax system is still quite a bit different. But you do need to hire a pro. And there is a lot of paperwork for a big exit to shuffle money, work it out of a company so that it's not all stuck in there. And even to sell your companies, because if you sell a company in Canada, you can sell a certain amount without any taxes, but you can't have a certain amount of cash to income ratio, or else you don't get it. So, I mean, the whole tax thing is super important. It's kind of over my head. I just do what I'm told to do and focus on, find those investments, get it structured, set up properly, and then I just trade or invest or buy the properties, whatever it is that we're doing. But yeah, I can't give you a whole lot of help there.
Good.
That's not my expertise.
That's all right. You got to know your lane, right? Know your expertise. So in case you are wondering, we have ways to defer capital gains taxes and eliminate estate tax for those that are listening, maybe even Chris. And what we're finding is the largest wealth transfer in the history of the planet's happening, and it's about $84 trillion is the estimate, according to some banks and Marcus and Millichap, over the next 20 years, known as the silver tsunami. We call it the reverse Tea Party because either it's going to be taxed by the government and it's gone forever, and or it's going to be in the hands of the people because they use legal tax means to defer the tax or eliminate the estate tax. So there's a couple stats. There's 10,000 baby boomers every single day in America turning 65. There's 77 million baby boomers in the US alone. And again, about $84 trillion worth of wealth across that major generation. I don't think it's just America, but it's the total. It's just a massive amount of wealth. Mm-hmm. And it's going to transfer. And the question is it going to be taxed, or is it going to be, maybe deferred or more tax efficient? So there's a strategy called a deferred sales trust. In fact, we wrote a book on it. Kevin Harrington from Shark Tank's in the book, which is pretty cool. And it's called Building a Capital Gains Tax Exit Plan. And it's essentially that, understanding the strategy, the team, which you need to build it. But what's cool about it is then you can invest back into things at optimal timing. And what I love about your strategy is exactly what we practice. We call it optimal timing, right? Which is sit on the sidelines debt-free until the deals make sense, and then buy back into real estate with good debt, or at least decent debt when prices actually adjust, versus doing this 1031 exchange and overpaying for a property with bad debt, right? Let the tax tail wag the investment dog. And so it's literally looking at the fundamentals of the marketplace, and it's investing when it makes sense. But the biggest challenge for people when real estate or businesses is illiquid assets. So they're not very nimble to exit. This is where the DST creates that, we call it like a time machine, right? Where all of a sudden it unlocks the time constraints while still deferring the tax. And that to us is the single time horizon. And you probably would agree is the single most important, fundamental to investing. What is your time horizon? Of course, what's your risk tolerance? And then being able to invest when the time makes sense. Not only that, once you're in this deferred sales trust, you can invest into multiple asset classes, all tax deferred at any time. So you're not stuck to just one asset class.
Yeah, that's pretty
right?
sweet. Yeah.
And so you can go into real estate, you can go into business, you can go into stock market, you can go into cryptocurrency, you can go into lending, you can do ground up development. And so all that being said, I'm curious, I know you're not a tax or legal professional, but unlocking that freedom to do that, what do you think that means to someone like yourself, someone might be selling a $100 million business or real estate and wants to invest with you?
Oh, it's priceless. I mean, to be able to do all that stuff is absolutely amazing. And one way that to kind of loop this back to asset reinvesting is, for example, As you were saying, like there's a time constraint, people get locked in and they get stuck in an asset. The way I see, buy and hold investors, for example, say if you're 55 or 65 and you have stocks and bonds in a buy and hold portfolio. Well, if we go into a big market correction that could take 5, 10, 15 years to recover, believe it or not, the markets are setting up very similar to a 2000 bubble. It took 12 years for the stock market to come back. That is a long time for an investor to be underwater with their accounts, big drawdowns, meaning they've lost 30, 40, 50% or more, and they have to withdraw money to live, subsidize their retirement, and they're stuck in this asset. What asset revesting does, especially if you start at a younger age, is because you're constantly just moving to something going up. Instead of delaying yourself, like we're all going to go through 2 or 3 major bear markets. They all last 5 to 10 or so years. If you do the old style investing strategy and you're stuck in an investment, you're wasting 20 or 30 years of your lifestyle. And the problem is we can't get time back. And so if we can find a way to defer taxes, make money consistently, and not have to have these big periods where we're stuck in an investment, it's night and day difference. The most valuable thing we have is time, and every day it goes and it gets shorter and shorter. We can always make money back, but you definitely don't want to waste time if there's tools and strategies to get around them.